Good morning, good morning, good morning, good morning. Welcome to the opening bell. I'm Ashley Reeve here, guys. It is the 18th of February, and we're getting started right away. Don't forget, all the information we'll discuss in this video is opinion. Please don't construe it as advice in any way. Let's get started with this morning's session, guys. You know, I'm really excited to be chatting about, what's happening in the markets midweek. We've had quite a bit of movement in Norway. In Norway, and I'll tell you why. So if you're joining for the first time, a warm welcome. Jules, I see you there. Good morning. We've had a move in Norway. I think why I'm saying that is for the following reasons. All right, now, many of you guys know, that the Lunar New Year is obviously happening, in China, and I want you to really think about this, or at least go and think about and do some research on this. All right, so think of the Lunar New Year as a massive global reset button. All right, now, while the Western calendar follows the sun, the lunar calendar follows the phase of the moon. That's just a little description, or at least one of the ways in which you can think about it, all right? And one of those reasons is, now, remember, Ash, where you going to? Because you're chatting about the sun and the moon and all of that, but where you going to? All right, I'll tell you now. The moon's cycle is shorter than the sun's, all right? The date drifts every year, and many times, or usually, falling between late January and mid-Feb, all right? Now, the simplest way to understand what is actually happening now with regards to what I've just mentioned. Now, China is the second most powerful country in the world at this point, all right? Many analysts are saying they're actually number one. It's just not really out there yet, based on their function, what they do in the world. Now, I want you to think about this in a very, very interesting way. Think of the Lunar New Year as a migration. You're finding that, or imagine the entire population of the United States, right? Plus a few million more. I'm talking about Chinese now, all right? Is all trying to get on a train or a plane at the exact same time, all right? Exact same time to go and see their loved ones, their parents. This year, 2026, we've seen record-breaking numbers as travels infrastructure is fully optimized, all right, for high-speed transit. Now, that's the first thing. The second is there's a 15-day marathon, all right? So the Lunar Year isn't just one night of fireworks. It's a 15-day festival with a specific to-do list. Example, the Eve, all right, is one of the most important meals of the year. It's called the reunion dinner. And this is where a lot of them are at the table with their family. They obviously speaking. There's a lot of energy. You have the red envelopes that's coming out. It's wrapped gifts. People are giving these red envelopes with massive amounts of cash. It's basically a direct wealth transfer from the older generation to the younger generation, all right? And this is so important. Now, Ash, where are you going with this? Listen to this. That entire move, you can call it a cash crunch or a liquidity drain in the financial markets, all right? In China, cash is king, guys, all right? Now, during this week and the entire tradition, all right, it creates a massive seasonal drain on the banking systems. Now, here's the problem. Hundreds of millions of people withdraw physical cash at the same time, and it creates a liquidity gap. Literally a hole in the banking system where money is sitting in people's pockets instead of in a bank's vault or in stocks, etc., right? It's so massive that the People's Bank of China, the PBOC, all right, had to inject a staggering amount of money. This year, they injected over $85 billion in early February to fill a projected vacuum there of $460 billion. Now, this has a global effect because so much Chinese capital is locked up in the spending of the holiday. Global trading volumes are dropping, guys. Markets are thin. Even the smallest trade that you can take can cause a big price swing. So check this out. Look at the gold price. China are big buyers of gold. All right, big buys of gold. Once the holiday starts, like right now, the buying stops instantly. Global gold prices often dip or they flatline, just like you're seeing now. Look at this. The gold price is consolidating at this point in time because the world's biggest customer is on vacation. I want you to grasp the power of that this morning. All right? So we are looking at technical movements, and we're looking at interest rate affected movements, which is coming from the FOMC at 9 o'clock tonight. All right? If the interest rates are being cut earlier on for the US, this is going to affect gold tonight. We are looking at a technical move for now. If we get a 4-hour candle, which will close at 12 o'clock midday, we are looking for a long back to about 5126. All right. But that is still staying within the range. It's still staying within this range over here. So we'll only trade it up till there. We cannot say we're going to trade all the way there because we have a country that is missing and displaying the power that they actually possess in terms of their function in the global economy, guys. So we're only looking to trade gold up right now. Volumes are thin. We're only looking for this movement from there to about there. That is the gold price. Look at Euro USD, all right? I took a bit of a buy here this morning. The reason for the buy was I'm looking at this specific support level here, and I'm looking at that specific support level there. So this is actually a support. This is a high that's formed. This was yesterday's trading setup, by the way. It's come through after our session, by the way. All right, so after 3, it came through. We created a high this morning. We created another higher high. So there's a correction taking place right now. So I'm anticipating price to push up back to 1.19, which is roughly about, if I look at it, about 72 points, 72 pips from here to there. Now, this is all technical movements, guys. These are all technical movements, all right? Because the dollar is a little bit mixed. It's a little bit stronger because traders are obviously cautious and waiting for the inflation data. But overall, you're seeing that it's more of a technical move here, right? There's no fundamentals that's suggesting that this move is going to take place, especially because of what is happening at this week or this time of the year. It's very important, guys. I mean, even if you look at the USD JPY, the yen is weak because Japan's economy is still a little bit struggling. While the IMF, IMF has said that they want Japan to raise their rates, the interest rates. This is going to help the fiscal policy. And so that's going to give us a stronger yen. But at this point in time, they're not doing that, all right? So the government is looking into where they're obviously having their talks, and we're going to see in the next couple of days or so what happens with Japan. The same with the Australian dollar here, guys. I'm looking for a 4-hour close above this area here. Now, again, this is all technical. At this point in time, the Australian dollar is strong overall because of inflation pressures. Now, just so you do know, from an Australian perspective, it slipped a little bit today, all right? But it's still at the high. And the reason for that is why it slipped is because the wage growth is still high. The inflation pressure is obviously still there. But the Reserve Bank of Australia already raised the rates and may raise again. So based on those two things, that we're seeing a bit of the sentiment pushing the Aussie down here. Now, I want you to know that from an impact perspective, high wages equals inflation risk, which equals possible more rate hikes. More rate hikes generally strengthens the Australian dollar, all right, over time. Now, that's what we're looking for. That is why I'm looking for the buy, because of the inflation pressure. All right, you can see I've also highlighted at this point in time a support. This is actually a support that's taken place. It's the same support that you can see here. So there is strength to the upside, but we need follow through here. We need a higher high. A high's already been formed. That's a high. We need a higher high, and that's the H4 that I'm looking for right there. All right, but I think the point that I wanted to drive across this morning is that China is a formidable country. The economy in China is extremely strong, guys. For the fact that, the big pause has happened due to the lunar year, which will only end the end of February, early March. We are seeing thin markets because them being the global factory of the world is affecting most companies globally, because many companies are manufacturing in China. And obviously, they are running on stock that they've obviously had to buy. before the holiday, because this is every year, so they have to stock up and so forth. But eventually, depending on the demand, if it gets done, you can see, there's a lot of chances that many of the metals, as an example, the zinc, the copper, because they're manufacturing, right, can also drop a little bit, all right? Well, simply because there is no movement in that specific place. So watch out for the metals. Look at the FX and the metals at this point in time for this week. All right, look at the metals. That's going to be your copper, your zinc, your palladium, etc. Watch those metals and watch the FX this week, particularly today at 9 o'clock tonight. We want to see what the FOMC has to say. Looking at the stocks here, guys, we are absolutely also just flat. We're really just pushing in a consolidated movement. Look at that. Look at that. Look at that. Look at that. It's absolutely consolidating at this point. That's the NAS 100 and the US 30. All right. They are all consolidating. Look at that. So it's very, very important for us to understand these types of factors that affect the market. If you buy right now, if you buy US 30 right now, and price drops, all right, based on a stronger dollar as an example, you're going to get yourself into trouble. You can blow your entire trading account because of that, all right? Absolutely, absolutely. So we need to see what price does in this area here, all right? We need a higher time frame, actually, to be showing us the direction, all right? And I'm talking short to medium term. I'm not talking long term. Long term, we are bullish. That goes without saying. We're speaking about short to medium term, from here to there, or from there to there. Short to medium term is what we're looking at for all of these ones right now, because the volumes are thin. So any high impact data can move the market immediately. The FOMC has the power at this point in time to move the market because there's no additional volumes. The vacuum is there. Based on what is happening in China at this point. So watch out for these swings. We might see them tonight at 9 p.m. All right. But that's it for the midweek checkup, midweek update on the markets. Ladies and gentlemen, thank you for tuning in. This is the opening bell. Trendsphere, I see you there as well. Guys, the market's extremely interesting. Please, as I close off here, remember the market is not only about charting, about candlesticks and patterns. Nope. The marketing, the markets has everything to do with the driving forces of the fundamentals, the politics, the economics, the social factors. And we're seeing that being translated onto the printing of these candles. You have to amalgamate them together. You cannot use them as silos or as separate cohorts. They are integrated. That is a fact. You can go and check it out. All right. But that's it from us here this morning, guys. Just to conclude on the narrative, we are running on thin volumes. We're looking at the FOMC meeting tonight at 9 p.m. We're looking at possible movements from gold to the upside, Euro USD to the upside, but that is short to medium term. So the risk is very high. It is not guaranteed at this point because of what is happening in the market. All right, we're seeing the high that's been created here. But again, if price has to break below this area here, 1.18, this low, we will not continue to be in this specific trade. We will get out of it because then obviously price is then pushing to the downside, looking possibly to come back to 1.17 to continue the specific channel. This could be a false breakout at this point in time. All right. But guys, that's it from me here this morning. What a fantastic time to be alive, to check out the markets. If you have not opened up an account with us yet, www.tdmarkets.com. You can also email us there at care@tdmarket.com. Have a fantastic Wednesday. It's midweek, ladies and gentlemen. Don't forget, 9 p.m., the FOMC U.S. interest rate meeting minutes. Check that out. All right. You can check it out on various news channels. You can check it out on different websites. It's there available for you to consume. All right. Ashley Reeve here. I'm signing out. This is the opening bell. Ciao, ciao.